Yo, yo, yo. If you guys are doing good. Thursday at 2 p.m. my time. Here we go. Here we go. Let's see how long it takes to work today. There you go. Quicker than yesterday. Much quicker than yesterday. Okay, let's pop out the chats. Let's go live chats. Okay, let's get the kick chat going. Yesterday was good, guys. We had 2 out of 3 winning callouts. Okay. Thank you for the follow. Appreciate it. Okay. So what we are going to do today is once again we're going to go look at the Forex markets. I just want to get the stream 1 second. Hey, what's up? Thanks for the follow. I appreciate it. Let's get kick. Let's just get the stream. Share. Yeah, bro. I basically on my stream yesterday simplified it right down so that anybody who's struggling knows exactly how to do it. Okay, let's just exit this. Just go to my socials, guys. Story. Post. Reel. How do I do this? Your story. Sorry guys, I'm just trying to... How do I post text? So there we go, text. Let's paste it. Won't be long, guys. I just want to just sharing this a little bit. Yeah. How's it not letting me do it? Well, today it's not letting me do it today. I think I'm just gonna have to create a bunch of uploads for when I go live next time. Hey, how's it going? And I think I'm just going to have to upload them as I go live on TikTok and Instagram. So guys, just to recap, we did a very basic fundamental understanding of inverse fair value gap, the strategy, having all your ducks in a row, as you can see. And I broke it down as simple as possible that anyone can understand. Okay? So we won't go into that today. So if we look at our top-down analysis, first let's just look at the economic calendar to see if we're going to have any news today. Khan says that there's going to be news at 8:30. I guess so. Doesn't look like there's a lot. Jobless claims. Continuing jobless claims. I guess so. I wouldn't say there's a lot of news at 8:30. Okay, so what do we do first, guys? This is the Forex charts. I need to morning. I need you guys to understand that this is Forex and the other chart is futures. There is a difference, guys. So if we look at the top-down analysis for these charts, which we'll do now, the indicators help a lot. As you can see, you can already see the previous day highs. Let's get rid of this. Previous day high there. Let's just get rid of this. We just get rid of some of these fair value gaps that we've already invalidated and broken through and. Okay. This one is still valid. So technically we just do this. Okay. Because it's a very strong draw. Okay. I mean, technically this is still valid, but for now we'll just leave it there. This needs to go. As you can see yesterday, guys, I literally said to you on stream, live, I said to you, if NASDAQ comes down, this is the 1 minute. I think it was on the 2 minute. Was it the 2 minute? I think it was the 2 minute. I can't remember what time frame we were looking at. But I explained why this trade worked. And why you should have got in there and rode it all the way up. Look at this. Look at this. Guys, if you rode this trade up, let's just to put things into perspective here. And you went all the way to the top. Not many people would have held it that long or that far. That's a 1 to 16, guys. 1 to 16. I don't care who you are. If you get a 1 to 16 trade, chances are you've just passed your account. I don't care who you are. Okay? That's if you haven't already passed. So we explained why this trade worked, why it made sense on Khan's strategy, okay, which is market maker model, right? What is the first thing? The first thing is we take the highs with lows like this. We go from bottom to the top, and the OTE level and the golden pocket level is here. Look at where it went. The fair value gap is here as well, which is another very, very key point, right? It taps into the fair value gap, and because you see multiple fair value gaps here, you expect it to go up, hit this fair value gap, come down, test a certain area, and as soon as you start seeing a green candle going up, then you enter. Because I showed you on AUD USD an exact pattern of it doing exactly that. Literally, the charts could have been copied from one chart to the other chart. That's how close it was. The only difference is that AUD was ahead of NASDAQ. So it had already made the move down and it already started to push up. That's why when I saw NASDAQ doing that, I said to you guys very clearly on stream that I think it's going to go all the way up. And true as nuts, look at the push, right? So we're going to get rid of this because we have already called that out as a win, okay? And this one was called out after the fact. So it had just been called out as the move was happening. So if you were late to enter this one, you could have entered it higher up and you would have still made money, okay? So just to neaten up the charts a little bit, we're going to clean up these fair value gaps, get rid of them, right? Okay. So for those that don't know, my name is Sean. It's the Viking King, okay? And I am here on a journey with you guys to become profitable, to make money trading, and I'm going to continue doing this for the next couple of years, right? And the reason for that is because there's multiple reasons, but one of the reasons is because it holds me accountable. Because basically what I've done is spend 3 to 4 years learning like crazy, blowing accounts, trying strategy after strategy, multiple different, like I showed you guys yesterday. If I go to my indicators, look at all the indicators I've tried. Okay, so many indicators: MACD strategy, orb strategy. Guys, I have joined, no joke, about at least 8 different discords for different strategies. Okay, I have tried and I've spent months per strategy. When I tell you that I know the strategies that I'm talking about, it doesn't mean that I created those strategies. It doesn't mean that I am the world's expert in that strategy. It simply means that I know the strategy and I know how to trade it, right? That doesn't mean I've made tens of thousands of dollars from it. It just means that I know how to trade it, okay? Where I go wrong and where my weaknesses are, okay, is a bit of the psychology and over trading. That's what I'm working on. The over trading part is one of the reasons why I'm streaming. Because if I'm streaming live to everyone, I can't over trade because you all can see. You can all see what I'm doing, right? Now, what I'm doing now is I'm not actually on the charts trading right now, although I was when I first started streaming, because I'm trying to do call outs. So I'm trying to take the 3 strategies that I'm implementing, and whenever I see them, call them out. And when I call out, that gives the person who's watching the opportunity to go, okay, he's interested in this level. Why is he interested in this level? Then that gives you the opportunity to ask questions. When you ask questions, I can follow up and say, this is the reason why I'm talking about this level. Not only that, is that if there's people in the chat that are brand new, that have started a strategy, and maybe it's the inverse fair value gap strategy, they're trying to learn it, and they're coming here for more of a learning experience, then I would recommend that they obviously open a demo account, right? So that you can not copy my entries, but when I do a call out and I say, this, for example, is going to go long, and I put the stop loss here and I take profit up there, you can basically judge for yourself and go, okay, well, if there's a retest, and then I can enter because, you know, Sean saying, or the Viking saying that it should go up. So let's see if he's right, you know? So you start thinking and judging and learning all on your own. At the same time, you're watching what I'm doing, right? So based on that information, we have had an amazing week of call outs. Every single day has been a profitable day for call outs. Okay. Yesterday was 2 out of 3. So we lost 1 trade and we won an amazing trade, as I showed you earlier. And then we got a 1-to-1 or a break even as the second one. Okay, so it was 2 out of 3. Before that, I think it was 3 out of 4. So our track record so far for callouts is literally, if I had to put a percentage on it, I would literally say it's about 70%, 80%, something like that. Okay, and not always, because sometimes I'll call out a trade and then I'll enter I won't enter, but I'll draw it up on the chart, and then all of a sudden price just goes sideways, and then I'll exit the trade. Well, I won't exit, I'll just delete the trade on the screen. When that happens, it just means that there's no price action, or there was something else that I thought about after the fact that then invalidates the trade. Okay? So I hope everyone in the chat's having a good day. I hope everyone's good. Hope everyone's I've just come from TikTok live. So I hope I grab some of the TikTok live guys that were there, and all I ask guys is for engagement in the chat. So if you guys are popping on and you may be listening in the background, or you watching what I'm saying, or you're listening to what I'm saying, all that stuff, just pop an emoji every now and then, or just say something. And if you're really not the type of person to chat in a chat, then that's okay as well. Just sit there and listen and learn. I am not always going to get it right. Far from it, in fact. As Khan would always remind me, that I've got a lot to learn. I've got a lot to, how do I say? I've got a long way to go, which is true. That is one of the reasons why I'm doing this, is to build a community, a strong community of a bunch of people that are on the similar type of journey that want to learn how to trade, or people that have no experience whatsoever with trading, and every time they jump on the stream, they learn something new. And whenever they win a trade, they put in the chat, just won this amount. Thank you so much for helping me. That is why I want to do this. I want to be able to see in the chat that I've helped X, Y, and Z people. That's the goal, is to get to that point. So hopefully we can build this community out. And we can make things happen, guys. So what I'm going to do now, hopefully, and I am a yapper, guys. So I do apologize in advance, but I go on and I yap on about certain things. And I do talk a lot. So sometimes I might yap on about one subject for 10 minutes just because. And that changes when I've got 20, 30, 40, 50, 60 people in the chat asking questions, because instead of yapping on, I'll be able to answer questions that are in the chat, or I'll be able to talk about topics that are in the chat. So the more people that jump in the chat and communicate, the more subjects I get, the more topics I get, the more things I can talk about, and so on and so on. So yeah, so let's do the top down, guys. So we go, we've taken the previous day high, previous day low is very far down, and there's a 4 hour, I think it's a 4 hour fair value gap, but we are bullish. Okay, so there might be a previous day low level here, but until we see signs of reversal, that's not really going to be, you know. So I like it when it reacts off a level like this. Okay, so we are in a 4 hour fair value gap, right, for Nasdaq. And until it inverses this 4 hour, then we can look at maybe, you know, looking at the next 4 hour and the next 4 hour all the way down. So at the moment, I would still say bullish, because we are delivering from a 4 hour fair value gap, and until that changes, I still think bullish, right? So this one's interesting because it's delivering from a hourly fair value gap up here. Okay. We have not inversed this hourly fair value gap yet. So until you inverse this hourly fair value gap, we're still bullish. Let's look at the 15 minutes. Now I could have drawn the hourly fair value gap, which is probably that candle to this candle. all the way across, but it's just going to clutter up the charts. And I don't have to because of the indicator. Look at the indicator, right? There's the price currently. There's the fair value gap. It's already drawn on the chart. Okay. So if I didn't have this indicator, then I could potentially do it, but then it would clutter up this area. Okay. Also, can you imagine if we were still doing trend line trading? There would be a trend line like this, all the way up. And as it broke at the top there, you would then enter. So this will be going sideways at this point. Okay, so based on the 15-minute, like we could come down and sweep the London lows again. Okay, sweep this area. So I would say, if for now, that this would be a target, and yeah, would be a target. Let's get rid of that. No, not so big. Why is this a target? Because it's a high like that. Okay. So I would say these two targets for now is what I would expect to see. Previous day high has been hit, swept, came down. When it came down, it came down to this fair value gap here, which will be in a higher time frame. It will be an hourly or whatever it was. Reacted from it. Yeah. Reacted from it, and now we'll see if it wants to come down, test it again, and then go up, or if it's just going to shoot up to this area and see what happens there. Now let's look at ES. Okay, so if you look at the 5-minute on Nasdaq, what's happening? Just consolidation. ES, basically the same. Okay, let's look at gold. Okay, so what I'm going to do is I'm going to get rid of this one. This was the break-even trade. And I'm going to take rid of that. Okay, so Powell speaks in 1 minute. Oh, no. Powell speaks in 1 minute. Let's see what happens. So if you look at gold, gold is so overbought. Look at this. Okay. Previous day low is probably going to be targeted. Previous day high is going to be targeted. Okay, we go to the 4-hour. Let's look at this. It's delivering from a 4-hour, so technically still bullish. So I would expect this to go up, take the previous day highs, and then maybe make a move down. Or break through and just keep going, I guess. We've inversed that fair value gap, so came down, respected this, pushed up. Everything looks bullish to come up here. I would say this is a target. And this is the target. Look at the 5 minute, guys. It's just going sideways, just consolidating. Let's look at the 1 minute and see if there's a big candle. Nothing happened. Okay. Okay. I was expecting more from that, but nothing happened. Nothing happened. Kani. Kani. Okay, so gold, we have our targets. We go to AUD. Looks like obviously bullish. So let's go target these highs, and then we'll see what happens when it gets there. Euro. Okay. I want to see the time on the hourly. So this new hourly is going to form in 30 minutes, basically. Right. We have to just let things play out, I guess. Well, let's see what happens. Maybe price. Maybe price will just shoot up. Okay. I would love to go through strategies with you guys because that's what I think is where I can help people now is information. Basically letting people know in the most simple basic terms how to use a strategy. As I said, if you got all your ducks in a row, place the trade. It's that simple. Just going sideways, sideways. Nothing much. You swept Asia lows. We have our targets that we're looking for. Because if this shoots down to this area, thank you so much. This shoots down to this area, clearly sweeps the liquidity, reverses, inverses, and meets the criteria, then we can look at maybe going long. Okay. Okay. I mean, it's not much else to say, unless I get a bunch of questions that I can answer. I've covered a lot of stuff in my previous live. All I can say, guys, is that if you're watching this on replay or you're watching this live, yesterday's live, I got into a lot of detail for the inverse fair value gap strategy. I broke it down as simple, and I showed you ducks. I showed you a bunch of different shortened versions. I showed you examples, and it's definitely something that you guys need to have a look at. We're just chilling at the moment, guys. We're just chilling. Waiting for something very interesting to happen. We have our areas drawn up. Is it a 15 minutes? I'll See, this is accumulation, guys. Right? If you see a strong candle down sweeping this liquidity here, and it respects this fair value gap here, right? So it respects this fair value gap and then does not inverse the hourly, right? And then it leaves a fair value gap on the way down on the 5 minutes or the 15 minutes. And then when it comes back up, it inverses that. That'll be a classic AMD setup. Why? Because we've taken London lows with a sweep of liquidity, which took out a bunch of bar stop losses. It respects a fair value gap on a higher time frame. Okay. So a lot of the ticks are there. And then it'll either inverse on the way up, or it'll inverse, then retest. If it inverses and retests, that's an extra confirmation. And then you can obviously ride it all the way up to previous day highs. That's if that happens. Because we are so bullish. Okay, so are you throwing things in my house?
Oh, you're not working?
Eh?
You're working now?
I'm working at the moment.
No, when do you want to be done?
I'm only going to be done tonight. A couple hours from now.
Just take a look at it.
Yeah, you must go. Did you set it up?
What?
Did you set it up on the internet?
No. Hamza isn't doing it.
Okay, well, maybe later he'll do it.
He's not going to do it. What's it? Can you do it later?
Eh?
Can you do it later?
Abby will be there later.
Abby?
Yeah.
I don't think she'll.
There's a respecting from a fair value gap. So if your bias is bullish on gold, Khan, just saying. You don't have to, but I'm just saying. Look at that candle. Respecting a fair value gap. Pushes up. Target will be up here. Definitely not in premium. And it's in a fair value gap. See this fair value gap here? It's been tested multiple times. So a little bit dicey until you get to this point here. Then you might be a little bit more safer. But this does look juicy. Wonder how many call outs we're gonna do today. It's actually quite fun. Okay, we have a sort of a liquidity sweep. AD, Euro, Euro USD. GBP JPY, market structure shift, swept the lows. Okay. There's the market structure shift, and they'll probably target up here or previous day highs. I've been burnt so many times like this because it's so close to previous day low, previous London low, which it took technically. Interesting. This one is very interesting. We have a market structure shift, retest of the area of interest. Nasdaq needs to pick a direction and manipulate in that direction. Kind of the same thing for ES. Gold needs to pick a direction. I think it already has. And we will see. We will see. We are gonna see. I've just seen your message now. Where's my trade setup? What does he need done? I can help. No? I've just seen your messages now in kick time. I had WhatsApp over the messages, so that's why I didn't see it. If this fair value gap wasn't here, then you could have put your, you take that long here, stop loss below the fair value gap, target there 1 to 2. That's my opinion. The only thing is this fair value gap needs to be broken. Let's see if that plays out or not. It's not really a call out. That's just me anticipating where price will go. If you go from here, which isn't really accurate, I would say, because your fib level is going to be huge. Because you normally take from the start to the top, right? Like that. And then this will be the area. But what happens if it's a small area at the top? Interesting. So we go from the top, the bottom, and this golden pocket area. Look at the 3 minutes. Only reason I said target this high was because it's the previous day high, guys. And there is a fair value gap here that I'm worried about. So if it closes above the fair value gap, like this line, closes above there, then you're good. You can also go stop to break even at that point. I would not call this a A plus setup anyway. I'd say it's more like a B setup. Because yes, you have a direction. However, you have already taken London highs. Okay. It's going a bit sideways. However, it did come down, respect the fair value gap, and decide to go up. Also, it's in a fair value gap area that could reject from. But we are bullish, and our target is at the top previous day highs. So with that in mind, this could be a manipulation leg up. Okay, to sweep this liquidity here. Okay, so if I draw another line, right, we could sweep up to take this liquidity and then come down because of all these resting orders here, the resting orders here, here. It's now a strong green candle up. So let's see. If it's a manipulation leg, we'll form a fair value gap. We'll come down and inverse it. And then we can target previous day lows. That's how I would look at this trade. So basically you would be at break even now. This would be risk free. So there's your 1-to-1, basically. Right? So you're now risk free. So whatever would happen now would happen. If it creates a fair value gap, inverses it, comes down, then at least you know you tried and it came up to that level, which allowed you to get into a break-even trade. I mean, yeah, stop at break-even. So a risk-free trade, I should say. Would you take this one, Khan? Or not? Not the cleanest setup, this. I even said it. I've said it multiple times. The 3 minutes is the clean. Is more cleaner than the 5. Market structure shift down into the fair value gap, and then bang up. So you probably, let's say this strategy has 5 ducks. Okay, you probably only have 2 or 3 of those ducks in this trade. So it's not that this trade won't work, it's that this trade needs a bit of confirmation on multiple time frames, maybe, to be a little bit. But you see what I said, if it shoots up, it barely inversed the fair value gap. So it's now using this area as resistance, basically. So we'll see what happens. Is the first call out of the day, or potential call out of the day, going to be a winning trade? No. I'm still stuck on the fence if this is actually a call out or not, because I was more drawing it up for the direction. So it was more along the lines of, this is what I think it's going to do to get to this level. So I don't know if I would have taken this trade, but it's still a successful call out, because someone could have taken this trade and gone 1-to-1 already, and then they sorted. So yeah. But you know what? I'm gonna count this, because, especially if it wins, because I entered around this area and I said that this is our target, this is what we're looking for, and I am concerned about the fair value gap to the left. And since in 38 seconds it's going to inverse, we should be good. Remember, we could still come up to this level, take the wick, create a fair value gap, inverse it coming down. That could still happen. But we now have a close above the fair value gap area here. So there might be a bit of a retracement down a little bit, because that will form a tiny fair value gap there. There it is. So this is a very basic trade, guys. What I mean by that is that, well, let's just say you use this fib from here to here. Okay? There's the golden pocket, there's the fair value gap, it comes in, it touches it. It's a bit of the wrong way to use the fib, right? So let's say you did that. Then you would go, okay, cool, it bounced off that area, it bounced off a 3-minute fair value gap, 2-minute fair value gap, 5-minute fair value gap. I think this is a 5, eh? Yeah. So it bounced off that, reacted, market structure shift happened, It came down into the fair value gap area here, started to push up, and then you enter. That's literally a basic model. The indicator helped because of the market structure shift indicator there. Okay. Even the indicator told me, which I didn't enter on the indicator, but it said entry, stop loss, take profit up here. Okay. So even the indicator saying that it's a decent long. So there are multiple reasons why this trade would work, should work, and could work. The only thing is that there were also doubts. Doubts meaning there's a fair value gap to the left. Okay, a 5-minute fair value gap to the left, right? That was either going to bounce off and come straight down again. And also price action. Everything is stale here for a while. So there's no way to predict this little burst upwards. You can't really predict it. So this would have been a riskier one. This, I think, would have been between a B and an A. I'd say a B or B plus. Now, if this trade worked, you'll probably be saying, well, why would it be a B plus or B if the trade works so well? Because, good question. I'm glad you asked. Because of what I described earlier, the fair value gap to the left, number one. Number two, this is like in the middle of the range area. It's after a bunch of consolidation. You can't it wasn't clear price action before this trade was entered. Okay. We are going off the fact that there's a multiple time frame fair value gaps that it respected and that it pushed up, created a market structure shift area on the lower time frames. You can see there. Okay. Market structure shift comes down, respects the fair value gaps, and then you can push up. Right? So this trade technically has already won almost 1 to 2. Okay, so if it pushes the previous day high, what you could do is I would go, my stop loss would be here already. I'd be trailing my stop. That's just me. I like to do that. Okay. Simply because you see these two wicks here, or this area here, it is now wicked that liquidity, right? Which means it could come all the way back down again. There's no rule saying it has to and must definitely take the previous day high. The previous day high is a strong draw on liquidity. It is somewhere where price will hunt. But if it is satisfied enough after taking this liquidity, there's no set in stone rule that it has to take previous day high. Okay, this is very close to previous day low, euro. And there are signs of it being bearish. So we went up a bit on. Let's see what happens here when this is the case. No, it was just a call out live. So I was just calling it out. I drew it up on the chart and it seemed to work. So I was hoping that you were on the same page or you were looking at the charts. It's not an A plus setup. It's more like a B plus. But hey, a trade's a trade, I guess. Nah, bruh. I don't know. I even said on stream, I said I don't think I would have taken this because it's a B plus and not an A plus. But sometimes we get those little B pluses and they work. So yeah. Let's look at Euro. Wow, look at that rejection candle right there. Okay, so that tells me a little story. What is that story, you may ask? Great question. Yes, you guys are on the ball today, I'll tell you. Your questions are actually epic today. What this big wick tells me, if you haven't been looking at the charts for a long time, is that, let's just make this a bit more transparent, is that we came up, swept this liquidity, respected this fair value gap. Okay, so if I drop to the smaller time frame, see how it's even respecting this fair value gap. So this is probably going to come down here to this previous day low. That's what that is telling me. Okay, that's the story that is being told there, right? That's what I expect to happen. Now when it does, if it shoots down fast to take this area and closes and really does take this properly, leaves a fair value gap here and comes back up within a couple of candles, the first 2 or 3 candles, to inverse that fair value gap, we then have a AMD model, which is accumulation, manipulation, inverse, retest, distribution up. Yeah. So we'll see. And of course, it doesn't have to do what I'm saying. Literally just me guessing. But it's so close to the previous day low, I don't see it not coming to take the previous day low. It's so close. Remember, we're inside a 4-hour fair value gap. It doesn't even show here because it's so far to the left. We have not inversed this fair value gap yet. I think it's going to sweep this and then it's going to go up again. That's my opinion. If you were watching the stream and you took this trade when I drew it up, please, for the love of God, do not still have your stop loss down here. You should be your stop loss should be at break even, right? Or you've now trailed your stop to 1-to-1, which is here, or you've trailed your stop to this line, or just under this wick here. Okay, so it'll be like 1 to 5, 1 to 1.5, and now you're pushing it to go to 1 to 2 here. Okay, trade management, managing risk, however you want to say it, is so important right now with a trade like this. Everything's bullish. We're expecting it to sweep this liquidity here, okay, which it's almost at. Once it does, okay, not even the experts can tell you where this trade is going. So you cannot be greedy, okay, and literally close the trade when it gets up here. Or you take partials and you're happy with the results. And if you're happy with the results, you close your trade. Let me just get rid of this since we're almost there. But we have swept this line here, which is liquidity. So again, we don't have to do this. I think we are. I think we're going to close above this and either retest it to come back up, or close above this and come all the way down. That's what I think is going to happen. But that's just me, guys. That's just a lonely old me. At least we called a decent one to start with, guys. So we're on the right track. Okay. I want to find out if anybody knows, maybe Khan knows, if you can create like a template like this, where you can put all the ducks and you can put things underneath it and save it, so that even if this closes, you can just bring it up and it's there. Okay. So how you manage this trade is up to you guys. You can literally trail your stop and accept the fact that you might get stopped out while trailing, or you take partials and you leave your stop at break even. Okay. Or you literally just go break even and let the trade ride until it hits 1 to 2 or 1 to 2.2, whatever the story is. Yeah. What are we pushing for? 1 to 2 would already be hit. Okay. So if you're a 1-to-1 trader, this is a win for you. If you're a 1 to 2 trader, this is a win for you. Perfect. Okay. You see what I mean, guys? Now, if you had trailed your stop up here, okay, then yes, you would be out this trade. But this from here to here, you would have lost a lot more money. Okay, a lot more of your profits would have been gone. But there are people that go, I'm not freaking out. This might look like a little death candle, but I'm not freaking out because I have conviction that it's going to come up here and take these previous day highs. Personally, I'd be at 1-to-1 already. I'd be out this trade. That's just me. Okay. Or I would have trailed it up there and I would have been out already. So this would have been a win. Okay, but it would have been a decent small win. Okay, Nasdaq, we have a lot of accumulation here. With London, there was a bit of a downward movement, upward. Jeepers, okay. I'd expect more manipulation for New York session. So manipulate down, then distribute up. That's more of what I'm expecting to see. Still a bunch of accumulation, guys. Not much happening, eh? On the 5 minutes, it's a very interesting story that's being told. This massive wick here, guys, is a huge story that needs to be told. It's telling me that this fair value gap is so strong that buyers came in and sellers said, hell no, and just ended up closing the candle there. So they did another attempt, and sellers said, hell no, we're not letting you get above this area. So are they doing a third attempt? And then they're going to go, hell no. And they're going to keep going all the way down. Okay, guys. So like I said, our target is this. Right? Our target is this. How it gets there is important. That's the first thing. And what happens when it gets there is also very important. Because if it blasts through, comes up and respects that, let's say creates a fair value gap on this line, then it respects that fair value gap and starts to move down, then you have a direction, guys. Then you know we are going to just keep blasting through and we're going to go down. Then I will draw up the trade on the chart for you guys to see what I'm talking about. And the stop loss will be up here somewhere, and we will target all the way down here. Bet you now that there's going to be to the left. Let's just get rid of that. There's liquidity right there. So that is what it will target. If it breaks that low. See, there's the fair value gap supports the break. So from there to there, it's just going to melt. Let's see what happens, guys. Let's see what happens. That's just my theory. And this is just us watching and seeing if that theory becomes reality. Oh, wow. Oh, wow. Okay. So the sweep of the previous day low. I think I'm going to talk about a strategy now, guys. Luca, how's it going? Hope all is good. Hope all is good. For those that held this trade at break even, it looks like you're going to get another shot all the way up here. So your conviction might be correct. So if it inverses this fair value gap here, then it will go all the way up to previous day high. If it respects this fair value gap here on the 2 and the 3 minutes, which it seems to inverse on the 3, and it inversed on the 2. GG, I guess. However, this is interesting. This is very interesting. It did not inverse on the 1 minute. Now that's a little bit of a story, okay? So if this trade doesn't work and it starts to go down, that's the reason right there. Okay. I just want you all to know that. Price came down delivered just into a fair value gap there, but there's another one there it respected. Good chance this is now going to go up since we inverse the 2, we inverse the 3, and in 7 seconds, 6 seconds, we're going to inverse the 1. There you go, guys. This is the trade. Boom. That's the previous day high. So if you wanted to go 1 to 3, that would be 1 to 3. So if you're a 1 to 3 trader, you'll have to wait there till you get to there. Unless your stop loss is less than mine, unless your stop loss is like here, for example, then you've already hit 1 to 3. So yeah, guys, bit of an unconventional trade, bit of a interesting call out, but a call out nonetheless. If it didn't work, we knew the reason why, because of the fair value gap to the left and because of the awful price action before that. People have either taken this trade and got out, or they are holding until they get out to previous day high. So well done if you took that. Look at this consolidation period. Oh, excuse me. Look at this consolidation. So you need to wait for this manipulation down, which could be market open, which is any minute now. Okay. Market open. The AMD setup looks like this right now. Okay. Accumulation. Right. Hopefully. Manipulation. And it will come up, come up, come up. Here, distribution. This is what this is kind of what I'm talking about. Okay? This is what I would be talking about for AMD. Okay? Why? Because all the stop losses and everything else, this fair value gap here, all of this, okay? If it sweeps it with a strong candle down, or 2 candles or 3 candles, and leaves the fair value gap and then inverses it going up, that is a strong indicator that we are going to go bullish, especially because we are higher time frame, we are bullish. Now it could on its own right here decide, okay, I want to rather go straight up. Then that's fine. You're just not going to get into an A and D setup. It's that simple. So either it presents or it doesn't. Easy, guys. This one we said we were worried about it, but the individual can decide whether they want to take it or not. Because remember, I am not a financial advisor. This is not financial advice. This is not trade advice. This is my own opinion. So whether you take this trade or not is entirely up to you. I can't stress that enough. Because when trades work like this, they feel amazing. Everyone's like, wow, so great. That's so amazing. But when it doesn't work, oh, but you said I must take this trade at this level, and you said I must do this, and you said, no, 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 no. I did not say anything. I said, this is what I think might happen. This is what I think might be the case in terms of the direction. I believe that this is what's going to happen. It's all my opinion, my idiotic peg opinion. So you might look at a trade like this and go, wow, so amazing. Look at the money, all that stuff that someone could have made. Maybe you're sitting there with an account and you go, hey, if I had just taken that trade, so next time I'm going to take whatever. Whenever he says enter here, I'm going to enter. Like, no, 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 no. You enter if you want to enter, not because I'm saying enter. Okay, so market open is right now, guys. So this candle could just death candle us and go all the way down. At this point, you shouldn't care. This trade should have zero emotions right now. Why? Because you'll be at break even. Worst case scenario, you're at break even. Second worst case scenario, your stop loss is here. Right? And I mean, you could have also taken partials and left your stop at break even. How you manage this is entirely up to you. But what definitely should not be the case under any circumstances is that you've just sort of left your trade alone and your stop loss is down here. You've taken no partials, you've moved your stop loss nowhere, and you've just said to yourself, I'm putting the trade in and I'm leaving it. That's the worst thing you can do right now. Whether this trade is working now or not, it's the worst thing you can do. At least go to break even if you are that scared about being wicked out or anything like that. Please, for the love of God. Okay. Here we have. Let's see if it's going to behave in the way that it should. Now, typically, you should not be trading the first 15 minutes of the market open. Okay? If you want to be safe, if you want to protect your accounts, theoretically, you should not be doing that. Why? Because of this. Look at this. This is disgusting. This is up, down, up, down. Look at these wicks. Look at this. There's zero entry there. And if you're about to enter into this, then you're literally just clicking the buy or the sell button at this point. Like that's literally all you're doing. Is you're clicking buy or sell and you're praying for it. So we still want this to come down, close here, come up, inverse here somewhere, and then go up. That's what we are looking at as a potential setup, right? This big wick really messes it up a little bit because now the fair value gap is going to be here somewhere, which isn't ideal, but it should be fine, I guess. So guys, this setup, if it plays out, will be the AMD setup. Why is it important and why is it a good setup to use? Because all of this accumulation here that you guys can see manipulation. I hate these colors. They just don't mean anything. Oh well, anyway. You see how it's come down into this fair value gap area. Plus, I think we can exit this area because this is already inverted. I'm getting rid of this circle because we already know where we're targeting, okay? I would like to see this candle close here somewhere or sweep right through here and then come up. Because it very might well just do this. Boom. Right? See how it respected it? Went up. Came down. Unable to disrespect or inverse because there's 8 seconds left. Let's see if it does. If it inverses this, that means it's going to take previous London lows. See how it did not? Okay. In a perfect world, this next camera does this. Next candle goes straight down here. Okay. Comes back up, closes around this area. And the next candle goes, thank you very much. I'll inverse this and I'll close here somewhere. Notice how the candles are behaving exactly the way I said they're going to behave. Okay? And it's not because I can foresee the markets. There are people that are literally in their Discord groups now that are talking exactly the same way I'm talking. Okay? It's pattern recognition. If you're able to see this happen, or not predict is the wrong word. It's not even predict. It's maybe hope. If you hope that that's going to happen. But hang on, hope is also a bit of a, I don't know. It's very strange for me to describe. So I'm looking at the 5 minutes. So this candle, I don't want this candle to come up here anymore because it will just create a wick there and take away the fair value gap. Okay? So we want this candle to stay where it is and just hover around this area. Okay? The next candle is the one that we want to pump up and close here somewhere. So if this candle now goes all the way up past this wick, then this basically the setup is invalid. Then the longs are not possible for this specific setup. We've even pre-drawn the boxes exactly where we want the candles to go. and we're still a fair value gap there. It's still valid, but if it makes it any smaller, or the price goes up into this area, then we're not gonna look at a trade there. So let's see if this is even gonna take it even further down. There's liquidity here. There's liquidity here. There's liquidity here. This could just dump for days, okay? But we are bullish, guys. We are targeting these areas here. That is our bias there, right? Look at the daily. Okay. With the 4 hour. See how we were respecting a 4 hour fair value gap, right? So until you disrespect that fair value gap, it is still bullish. Same with this. In 20 minutes, if this inverses this fair value gap, then we are bearish. Then we're going to come down, right? This is still okay, guys. Because this fair value gap that we are watching, okay, so gold is making it a different move now. Okay, so gold is actually behaving like an AMD setup right now. You have accumulation, manipulation up, sweeping a bunch of liquidity. Okay. So it swept a bunch of liquidity. And it's now inversing that fair value gap on the way up. So hopefully it doesn't come down here, price. And it comes back up to retest, and then you'll enter into a short. Okay, so this is still okay. We have a small fair value gap here, which technically is still valid, right? Still valid. So our goal is this. If we close here, anywhere from that body candle there, the top of this body, to this fair value gap, anywhere there, if we close from this candle or the next candle, preferably this one, then we can enter either on the retest coming back down, or we enter straight away. That's if it inverses. All of this is for nothing. If it just melts, then we can't say we missed the trade, because we're waiting for a specific setup. You see? So if it starts melting, then we change our tactic a little bit, because then if it melts past this point, comes up, creates a fair value gap in this area, respects it, and then you can look at a short. So it all depends what price is doing. If you look on the 15 is also painting a picture. The 15 is giving it a chance to leave a fair value gap here as well for the 10 a.m. reversal. So if this closes and the next one closes down here and it leaves a big fair value gap, and let's say 10:45 or 10:30 it comes up. What is that? My
drink out of your horn.
horn. Nah. But I want to keep it here for...
Yeah. Just rinsed it out. You can.
my real Viking horn. Wow, look at that, guys. So this, wow, okay. So you would be out this trade now, guys. Remember what I said. There's our initial winning trade, 1 to 1.5 or 2, 1 to 2. Now you wait for the retest. I don't like how far this death candle is. Okay. It's dumping so far. Right now, you stay out of the markets, basically. Was there a way to catch this? There is a market structure shift here. There's a retest, I guess. So if you were looking at shorts this whole time, then you could have maybe took that. Now we sit and wait. There's a lot of price action happening here, a lot of volume. I would like to see the next half an hour worth of price action before I draw up my next setup, because I would like to see the next 15-minute candle. I want to see what size fair value gap this is going to leave, if it's going to even leave one, because that's a huge sweep of liquidity, right? If this closes and inverses this fair value gap in 58 seconds, this fair value gap is inversed in 50 seconds, then we could potentially go a lot lower. But you see how now it's projecting up. Buyers are stepping in and saying, wait, hey, don't go too far. Don't go too far. Hang on. That's what buyers are saying now. 30 seconds. If we just melt here, then we just melt here. Then we took one call out. We had a one trade done for the day. Euro's doing exactly what we wanted it to do. As I said to you, okay. Accumulation. Look at this, guys. Accumulation. Even though the indicator is saying bearish, bearish, there's the fair value gap. We've just swept all of this liquidity. Let's get rid of this. Okay. We swept that liquidity. We swept this liquidity. I guarantee you that there's going to be a fair value gap to the left. Or not, actually. Interesting. So we might just come and take this. So this setup might not be valid. Very interesting. This 4-hour fair value gap is being inversed. So if this fair value gap here, okay, so all right. So if this comes up and closes here, then I will draw up the long setup. That'll be a call out. Okay, this is what I'm talking about. If it closes there, stop loss is going to have to be really big, at least there or here, and then you're going to have to target previous day highs there. That's what I would do. Okay, play around with the stop loss a bit, how you feel comfortable. But if this candle here comes up and inverses, then I would enter there. Stop loss. Eish, that's a big stop loss. Maybe at this candle here. Something like that. Only if this candle or the next one come up in inverse. If it doesn't, then it's not valid. Because remember, look to the left. I mean, look at this. This is the hourly candles, right? It came up, respected the hourly fair value gap, and came down, right? So this candle could then come back up to either this fair value gap or another one it creates. And if that's the case, then we're looking good. So let's see. Let's draw that up and see if it works. Let's look at the 5. Multiple fair value gaps. In an instant like this, I would like to see the I really would like to see the 15-minute. I would trade it on the 15. Get rid of that. So this would be a 15-minute trade. So this fair value gap here, I'll leave it there, but so hopefully this creates a small fair value gap or a decent sized fair value gap. Okay, and the next candle just closes above it. The Nasdaq is now looking on the 15 minutes and see. The euro is now behaving, and if it shows signs of like it closes close to the top of that candle here, then the next one hopefully will close here somewhere. Let's just look to our LFC. Here's a 4-hour fair value gap that it did not come back into, and it might want to do that. So they've had one good call out, guys. Here's the next one that we're looking at, which is euro. Why euro? Because of all this accumulation, all of it. Right? We swept down, and now we're about to inverse. Hopefully in the next 5 minutes. Now this is a unique one, okay? See how there's 2 fair value gaps. One here and one here, right? You might ask yourself, what happens in that scenario? In a perfect world, the 15 would leave a gap and you would then use that. So this, if this closes above this fair value gap here, then it's fine. But if it closes inside this fair value gap but inverses the first one, then it's not fine. So both gaps need to be inversed now, if that makes sense. You guys, like whoever's on chat, if they didn't know that, now you do. Okay? Yes, there's 2 fair value gaps here, right? There and there. Now both need to be inversed. One can't be inversed, and then the second one's left open, because if this closes here, for example, who's to say that this won't be respected and then come down? So this needs to close up here. If it closes up here, you can either put a order in for when it comes down into this area, you can take the trade, or you can just enter where it closes. It's entirely up to you on how and when you enter. But the point is that you enter. Okay, because this would probably be an A setup. I'm not going to say A plus because we are not delivering from a fair value gap. This here is to the left is not a fair value gap. So you're looking at an A setup, not an A plus. You would need a strong fair value gap with multiple time frames to be A plus. Look at that just melt. Melt, melt, melt. Yeah, you see NASDAQ has messed up everything. Let's clear this. Why is this now invalid, guys? Why? Can anybody say anything? Because there's no longer a 15-minute fair value gap. This wick from here to here has just messed up this trade. Why? Because if this had just gone to like there and then created this fair value gap like this, right, with no wick here, and then the next candle closed over here, you would then enter into a trade like this. Boom. Stop loss either below the fair value gap or below there, and you would target all the way up. That's what you would do. Whereas now, it just wicked, so there's no potential trade there on the 15. Technically on the 5, there's still something, but it looks like it's been respected and just going. Okay. Sometimes this is going to happen, guys. You see how this is just closed all the way down here? It's too far away. So you might have caught this trade on the way up. Okay. You see how it did not take previous day highs? And I said to you, if it takes this, okay, then there's breaker blocks and everything here. So this death candle, you need to wait for a retracement up at least halfway up the death candle. Okay, because this is a market structure shift basically. So you need it to come at least to here and then start rejecting, and then you can enter. Not this. So it's all about now being patient. Being patient, being patient. We have some interesting price action on AUD. See how it's respecting the fair value gap here. So if this happens up here but inverses this first one, it's still a valid short. We're still going down. So you could right now, if you wanted to, if you had a short bias, you could do this. Get rid of this. And you could literally short this, stop loss above there or there, like that. And then go all the way down. Here. Okay. Wait, what is that? It's just a line. Never mind. Okay. That's what you could do if you had a bias like this, right? I'm not going to draw it because, yes, everything's bearish. Yes, it could potentially do that. But I'm going to see if it inverses the top one and pushes up because we have taken previous day lows. The indicator is telling me to take a trade at this level. Put your stop loss above here and ride it all the way down to this level here, which I assume is a very important level at some point. Okay. So this we will be expecting to either inverse this, right? And go. If you look at the pathing tool, it's either going to do this, inverse, come down, and then go. Or it's going to respect the market structure, shift again, come there, and then go. This is what I am expecting. I know this is a bit obvious. Oh, you're saying that it could go up or it could go down. That's exactly what I'm saying. But I'm saying it differently. Obviously, it's going to go up or down, right? It could go sideways, which means that is something that could prove me wrong. But my point is that if it goes up, it's going to behave in that way. If it goes down, it'll behave in that way. That's what I'm saying. I'm not saying it could go up or it could go down. I'm merely stating that if it does, then you can enter accordingly. Like this. Look, it's just respecting and going straight down. So okay, so it looks like the shorts are more valid, right? So what did we drop earlier? We said like that, right? Something like that. So let's draw it up and let's see what happens. Okay. Let's get rid of this. Also, you need to bear in mind, we have inversed this massive 4-hour that got tested so many times. Look how many times it got tested. Okay. This beast got tested so many times. And here it just inversed. So if this in 3 minutes and 45 seconds closes down here somewhere, then it's GG, game over. Now you can either increase your stop loss and be extremely safe and go like this, okay? Or you can leave it where I had it, above there, for a 1 to 3. Okay. Screw it. Let's say this is the other call out. And let's see what happens. Look at gold. It did not come back up to retrace or anything, so it is what it is. This is consolidating now. So we've got a big move down and it's just consolidating. Hey guys, got my webcam going, so you guys can see. I do want to show you guys, since this is a Viking channel, the horn, the Viking horn. You drink out of it. So basically, every time we win a trade going forward, okay, so every win we get, guys, every win, we're going to have a drink from the Viking horn. Okay. Every time we win, we're going to have a celebration Viking horn drink. Just so you guys know. So yeah, that's my horn. I'm sure you guys don't want to see my ugly mug, so I'm going to switch my camera off again. ES dumping. Let's see. ES is Murasa dumping. Yeah, it is. So ES took previous day highs, or London highs, and Asia highs. So if we were looking at ES on the smaller time frames, let's see if we can find a trade. Not really. Don't really see something that I would go, that's a short. You know? But yeah, ES is dumping. Let's look on the 5, the 15. Let's look for an SMT. So look how much weaker Nasdaq is than it was for ES. The SMT was so clear. There to there. So big bullish SMT. So this short with the SMT would have been a lot more obvious if I saw that. So if I was watching ES and I saw this happen, look for the SMT, which was this. There to there. Let's just go with white. No, let's just go with this. So the SMT was there to there, there to there. So yeah, hopefully when we recognize that. What's wrong?
May I please have some Pepsi? Because it's not just
You want my juice?
no. There's no juice upstairs.
Open up.
I've never tried some Pepsi like before.
Huh?
I've never tried Pepsi like before.
You want a what?
I've never tried Pepsi like before.
Oh, this is this.
Oh, that's good.
Have you found something yet, Khan? Please tell me you found something, bruh. Please. This could be another liquidity sweep on this bottom area for a move to go up. But based on what I'm seeing, pretty sure this is going to dump. No fair value gaps. Liquidity further down. We're in a fair value gap. We're in a daily fair value gap. This is interesting. Interesting indeed. Thank you so much. You did that. Okay, guys, let's see how the second prediction for the day or second trade setup for the day works. And the reason why this is not really one of the three that I use, okay, but it's still something that could be valid, is because technically we are still doing an inverse fair value gap strategy here, right? We only do it on a bigger scale. This is a 4-hour fair value gap, right? Nah, short. Let's go. Let's see. Go for it, bruh. Put that short. Put that short. We have also just swept liquidity to the left here, eh? Just saying. We've swept that. Yes. ES has also swept liquidity. Just. But based on movement already, probably right, bruh. Previous day low, here we come. I put the shorts. No. I said short on euro. And I was explaining why. Because this is the 4-hour fair value gap that got tested multiple times. Okay. If you look at the 15 minutes, hypothetically. Okay. This 4-hour has been tested 1, 2, like I said, 3, 4, 5. Like it's been tested so many times, and now it's been inversed. So it's closed below. So technically, on a larger time frame, this is still the inverse fair value gap strategy. However, it is risky, but it is there. And the only reason I am saying this like this is because we see respecting this respecting this fair value gap here, the 5 minutes. See how it couldn't break through the 5 minutes and it just started to dump. So we're also bearish on the hourly and the 4-hourly. Look at these candles. Just show signs of bearish. So we'll see. Is this second trade going to work or it's not going to work? We already had one win for the day. Okay. There to there. 1 to 2. This would have been so much better if this death candle closed over here, because it created this 15-minute fair value gap right there. So if this just inversed and closed here, you take the short from there, stop loss up here, and you target all the way down. That would have been a good trade. Potential for GBP JPY to go to previous day highs, and if that's the case, then euro should come down. So we'll see how that plays out eventually. Look at the indecision happening here. Look at this. Hey, bro, this is what Nasdaq has been doing recently. It makes one big move, and then it just consolidates like crazy. Or the price action just gets so choppy that nobody can trade. Like it just shot down, and now it's just doing this. This might have caught some people at a break-even trade. This here. Boom. There. There. The guys that do the inverse fair value gap strategy. This might have caught someone at break even, because you would have went break even there, and then you would have got stopped out at break even. So that would have been a break even trade. But that's literally the only thing I can see. Everything else is just because the reason you would take that long there is because you swept liquidity here, you came down, you swept it again, and then it's a strong V-shaped recovery. There's the fair value gap here, right? Boom. There's the fair value gap. You inverse the fair value gap. You still haven't taken internal liquidity yet, right? There you might have taken it there, but definitely here. This is where you would target. So that's the only Nasdaq long I can see happening right now or earlier. Other than that, I just don't see anything on Nasdaq. Gold is just hopping along. Euro is like dying down at the moment, so it'll be interesting to see. Be interesting to see if this is another liquidity sweep for a move up, or if we're going to come down and take liquidity, come down further. Very interesting to see. Are you talking about Nasdaq, bruh? What are you talking about? Nasdaq, I was on the 1 minute. I was looking at the 1 minute. Euro, I'm looking at the 5 minute. After Euro respected this fair value gap and started to pump down, drew up the trade here, and we'll see if it respects it or not. But if I was staring at Nasdaq, and I was trading today, I would have taken this trade, got stopped out at break even. You're saying it just needs to dump, dump, dump. Does that mean you're in a trade, bruh? I know what you want to do, bruh. You want to go on Discord and chat. You should have just said so, bruh. I'm sleeping. Yeah, I'm sure. You never sleep, bruh. You never sleep. Not much happening on the charts right now, guys. Except we're waiting for Euro to decide if it's going to actually go in the favor of that we want it to go, which is down. We've already taken a winning trade. Well, not taken, already called out a winning trade, I should say. Um, Boom. Look at this. Hopefully this is not manipulation in any form and that it's a move down. You're wondering what this white line is that if the price gets to this white line, I would, if I was you and you entered this trade, I would go to break even. Normally when you get 1-to-1, so if you draw it up on the charts, okay, and your trade is 1-to-1, you go to break even. If there's no internal liquidity that is clearly a area of interest, like if there was internal liquidity around this area that was really strong, then that would be your 1-to-1. So it just depends on the charts that you're looking at, the price action involved. If this is the price action, hypothetically, okay, so let's say you enter into a trade here and it's slowly going down and slowly going down, you can get away with it, okay? You get away with maybe leaving it for a little bit because price is so slow. But when price is shooting down, it's very difficult to then go, maybe this could be a manipulation, so I need to cover my risk, okay? So technically, this could be a break-even trade now because it's literally almost touching. Because this could just be taking out a bunch of liquidity for it to then shoot up and inverse and go up. Hopefully we can go 2 for 2 today. That'll be pretty cool. No losers, 2 for 2. Keep our clean winning record. Well, the record is not really clean, but basically green days. A green day is an overall green day. Whether you win 2 trades, lose 1 trade, or you lose 2 trades but you win 2 trades, overall you've had a green day. That's all I care about. So that when you do have those red days, and you are going to have the red days, don't let anybody fool you. Don't let anybody tell you you're not going to have losing days. If you follow, this is a pitch. If you follow me and you do exactly what I show you, you shouldn't have any red days. You shouldn't have any losing days. If anybody ever says that to you, and you're looking at buying a course from them, joining a Discord that they have, don't. They are lying to you. They are starting off by lying to you. It's just that simple. So you would definitely be at break even on this trade. So whatever happens now, you will not lose money on this trade if you entered. I have to make that extremely clear, and I need to be extremely clear about this right now. This should not exist now. You should be there. Right. And the reason why I'm talking like this and saying things like this is because a lot of people, and I'm one of them, that need a very clear instruction, need very clear, when you're looking and learning from somebody, they need a visual. They need something to learn from. They need something that they can relate to. And when I do this and I close it, okay, and I say your stop loss needs to be here, you know exactly what I mean. What is Khan saying now? If you were looking at the live, then you would know exactly why and how I took this trade. Initially, I was looking for the long if it had come up and inversed both of the 5-minute fair value gaps. But because it respected the first fair value gap from the bottom of the price and it had inversed a 4-hour fair value gap, that is why when I saw the red candle come down, I said this could be a potential short. Simply because it inversed the 4-hour and it respected the 5-minute. That's why I put this up and I was explaining as to why. So it's not just a random highball. What I'm explaining to Khan is that initially, as you guys know, oh, he's actually commenting. I was looking at it live. Yes, as this, okay, now let me go through this, Khan. As this candle started to push down, I drew this up and I said, here we go. If this price keeps going down, closes below, then we're looking at shorts. Why? Because this is a 4-hour fair value gap that got inversed. So it's still a inverse fair value gap strategy. It then came up. Yes, it didn't wait for the candle to close. But even if I just sat here and waited for the candle to close, and I said to myself, this is too big, the stop loss. You could just wait for the retracement there. So either way, you're still going to you're still going to draw up the trade. I would have still drawn up the trade regardless. But this is what Khan does, guys. He likes to troll me. He loves to troll me. Even if I say to him and you guys that this is the reason why I drew this up, I am not in a trade right now. I am not trading right now. Okay? I am merely drawing up trades that I think will work. And he's still having a trolling moment with me. Okay, Khan. There's the candle close. Are you happy? There. That's the trade. Right? Like, it doesn't make a difference. I wouldn't have drawn it here when this candle closed. I would have waited for a retracement, which would have been here, which is exactly where it was. No. No. That's you. You can wait till the candle closes. It's fine. Okay, so Nasdaq is dumping. So anyway, guys, that is why I drew this up. And now that is why I said it's a risk-free trade, because it's now gone to 1-to-1. There was an inverse on the 4-hour. It retested at 5 minutes. There's a market structure shift. All of these things, market structure shift, inverse, retest of the 5 minutes, technically of the breaker block as well. And then it started to move down with this candle. And the only difference between Kyle and I would have entered this trade was I said over here, hey, here I'm gonna draw it up and let's see what happens, versus here. That's the only difference. No matter what he says to you in the chats, that's the only difference. Yeah, bro. Yeah, bro. So anyway, so this would be risk-free. So this would be a decent setup. This would be a decent trade. We are bearish, so that also added to it. So I would say there's about, let's say if there's 5 ducks that need to be in a row, 4 of them were in a row. So not the best, but at least it's working. Nasdaq could literally turn into an power of 3 setup here. Hey, how's it going? Thank you for the follow. I was hoping for a fair value gap on the 2 minutes. So the 3 minutes is the one that has the fair value gap. It's tiny though. This is tiny. Barely noticeable that. I don't know if I'd be confident enough to put a trade there. If this gap was like this, right? And it was on the 2 minutes and the 5 minutes, then yes, we could look at a potential AMD setup here. But that little 3 minutes, Look at how far this gold has gone. Mm, mm, mm. If only this closed over here instead of down here. Yo. Come on. Come on. Nas down 50%. What's this Powell's doing, bruh? Do you think so? You see, Trump's gonna give, well, he's looking at giving a couple thousand to each American citizen based on taxes. I mean, not based on taxes, on tariffs, because they're doing so well with tariffs. So he might carve out a bit of that and distribute it amongst the tax-paying citizens. This could be forming, Khan. This could be forming a AMD setup. Swept liquidity. It's sweeping more liquidity. There's a fair value gap here. I guarantee there'll be one on the 15. Yes, there will. Look at this, bruh. Let's look at the hourly. Nothing. 4 hour. Middle of the 4 hour. Look at this. Middle of the 4-hour testing, right? Let's see. Reacting from the 15 minutes. If this stays like this, at 2 minutes, it creates this fair value gap in 2 minutes. What you gonna see, bruh? You're gonna see, bruh. Respecting a 15-minute fair value gap, sweep a bunch of liquidity. There. Yes, it might be going down. Yes, it looks like it's dumping. Let me look at, firstly, let's confirm this. 15 minutes. Respecting. Let's look at the bigger picture here. All I'm saying, that if this candle closes like this without inversing this 15, right? And the next candle comes up and closes, yeah, I will draw up the trade, bruh. That's all I'm saying. Yeah, go down, but come up and close in the fair value gap. Easy. Or just melt. Or just melt. Ooh, is it going to inverse? Yes, it is. Aye, there's the shorts. There's the shorts. Shorts are in, bruh. Full port, Khan. Full port, bruh. Shorts are in. Do it, Khan. Full port, bruh. It inversed. Now I go long. This is still valid. I don't know. This is still valid. Khan's doing the opposite strategy. When I say go short, he goes long. That's why he's so successful. Because throughout the years, he's done that. Every time I've taken a short, he's taken the long, and he's just keeps winning. So you're welcome, bruh. You are welcome. The opposite strategy is a strategy that I've coined, and it's part of the brand. It basically means that if I put a short and you go long, a lot of times you will be correct. That is the opposite strategy. So, and you do it at your own risk, because there are times that I will be correct, and there are times that you will lose doing the opposite strategy. So the rule of thumb is this, guys. This is the rule of thumb, right? To maximize your potential with the opposite strategy. I've laid out a set of rules as to what I look for when I look for an entry for a trade. If there are 6 rules or 6 ducks that are in a row, and 2 or 3 of those ducks are not in a row, meaning there's 3 or 2 of the rules that I have not followed, then you can do the opposite strategy, because then your odds of then pulling off the opposite strategy will be a lot higher than as if I enter and all 6 of my rules have been met and have been looked at, then the opposite strategy goes down. Does that make sense? So yeah, that's the rules for the opposite strategy, to maximize profits when it comes to using that strategy. So your one-to-one traders have already pulled their profits and they're already out, and they say, thank you very much, give me my money, I'm going home. So your one-to-one traders are already winners in this trade. You are at break even no matter what, if you did take this trade. Your 1 to 2 will be here, plus minus. Okay, so let's put another line here. That's your 1 to 2. And of course your 1 to 3 is there. But regardless, you should be break even. Whether you take partials now is up to you, or whether you close your trade because you think this is enough is up to you. If you took this trade, you are break even. Nazi, there's the full port card. Told you, full port, bruh. Told you. Yeah, it's full port. I classify this as a win already. Why? Because if you took this trade, you are able to take a 1-to-1, and that is a win. It's that simple. The second it goes 1-to-1, you are at break even, and you either have taken the trade already and you are done, or you are holding it. But you are not losing, which means it's a win. Unless you are more per peg than me. Unless your per pegness is so great and so big that you overshadow my per pegness. And if that's the case, then you're going to have a very hard and long battle, a painful battle in the next couple of years to come. And I really do feel sorry for you. I have suffered through so much pain when it comes to trading. Khan will attest to that because he's been through a lot of that with me. So that you don't have to, guys. So that when I give a call out here, it's out of how do I say this? It's out of concern for you to not go through the type of pain, even though I know that if you're starting off, you're going to feel the pain regardless. That's what I'm trying to at least minimize. You just have to go to bed, bruh. Oh, okay. Okay. We do a little rocket. I see no one on Discord. Hi, boo. What do you mean? I see no one on Discord. Oh, we're coming. Right, guys. Well, time to start jamming a bit. 2 wins for the day. Bit of education. Bit of chart time. And if you are new to trading and if you are on your journey and you are learning and you got some value out of this and you think to yourself, I can do this. I will appreciate a follow. I will appreciate emoji when you come in the chat. And yeah. Anyway, guys, take care. Have a great day. I'm going to spend some time with some bras and talk nonsense. Take care.